Please start, sir.
Sir. Dear students, good morning. We will be waiting for members to join to the class. We'll be revising at least 5 chapters today. Accounting standards, branch accounting, hire purchase, insurance claims, incomplete records, maybe 1-2 chapters more. Here we start with the first question that is from branch accounting. This is a past exam question, guys. It's a past exam question. Here we are going to solve this question. Guys, the question says Jolly Industries of Delhi is a trader in spices, branch at Jalandhar, to which goods office head office invoices goods at 4 + 1 5 20% of pro forma invoice price. And you have to prepare branch account. Prepare branch accounts in the head office ledger. You have to prepare branch accounts in the head office ledger. Branch do not maintain, so it is dependent branch. So we answer it here. It will be detailed, beautiful answer, guys. So the topic is dependent branch, stock and debtors method. We prepare branch stock account. So let's prepare branch stock account. To balance brought down to goods sent to branch account by branch cash account by branch debtors account. Let's read the question. Opening stock is 1,25,000 at branch. Opening stock is 1,25,000 at branch at invoice price. Goods received from head office. Goods received from head office are 6 lakhs. 6 lakhs. Next, return to head office is 60,000. 60,000 returns. Normal loss out of goods sent to branch from head office. Normal loss of goods during transport out of goods sent. ठीक है ना, normal loss of goods during transport out of goods sent by head office to branch, normal loss of goods in transport, and now goods received from head office 6 lakhs, goods received 6 lakhs, normal loss of goods during transport out of goods sent by head office to transport, goods received from head office, so it is 6 lakhs 12,000. 6 lakhs 12,000. The returns is normal loss by normal loss is 12,000. By normal loss is 12,000. Sales return 11,000. 11,000 are the returns. Salaries, rent, other expenses, closing debtors, closing stock 1,50,000. Closing stock 1,50,000. So by balance carry down 1,50,000. So the balance carry down is 1,50,000. Okay. We continue further. How to paste it? Why the things are not being pasted? Okay. We will copy it here. Why it is not being pasted? Anyway, can't help it. Let's continue. The first account is ready. We are on the second account. Branch debtors account. To balance brought down. To branch stock. By branch cash. By branch stock. So guys, opening debtors are 1,10,000. Opening debtors are 1,10,000. Cash received 3,45,000. 3,45,000. Bad debts 9,500. By bad debts 9,500, discount 5,500. Discount is 5,500. Discount is 5,500. Discount. Sales return are 11,000. Sales return are 11,000. Sales return are 11,000. Closing debtors 1,55,000. The debtors are 1,55,000. Debtors are 1,55,000. Debtors are 1,55,000. So 1,55,000, 5,500, 9,500, 11,000, 11,000, 3,45,000 minus 1,10,000 is 4,16,000. It's 526. Net credit sales is equal to 416 minus 11,000. 4,05,000 is net credit sales. Okay. Now the credit sales are 4 times the cash sales. Credit sales are 4 times the cash sales. The credit sales are cash sales is equal to 1/4 of net credit sales. assumed. That is 1 by 4 of 4,05,000. 4,05,000 divided by 4. 1,01,250. So 1,01,250. Credit sale is 4,05,000. 1,55,000, 5,500, 9,500. 11,000, 3,45,000 minus 110, 416, 4,05,000. So this is balancing figure. So this is balancing figure. So here you will find to know the surplus. So 1,50,000 plus 12,000 plus 60,000 plus 4,05,000, 101,250. This is 8,44,250. 844,250 minus 1,25,000, 6,12,000, 11,000 to surplus. Surplus is 96,250. So this is surplus 1,01,250. 4 lakh. 16,000. 4,16,000. The balancing figure will change. The balancing figure 101,250 plus 4,16,000, 60,000, 12,000, 1,50,000. 1,50,000, 101,250, 4,16,000, 60,000, 12,000, 7 lakh 39,250. Now 1,25,000, 6 lakhs 12,000, 11,000. Shortages. Shortages. Not surplus. Shortages. Cash sale 101,250 plus credit sales plus 60,000 plus 12,000 plus 1,50,000. 1,25,000, 6 lakhs 12,000, 11,000, 7 lakh 48,000, 7 lakh 48,000. Shortages will be 7 lakh 48,000 and minus 7 lakh 39,250. Shortages are 8,750. Shortages. That is balancing figure. That is balancing figure shortages. We move further. All seems very well. No problem. branch adjustment account, particulars, to normal loss. The normal loss is 12,000. Two shortages, 8750 divided by 5, 1750 shortages. To stock reserve account. The stock reserve will be 30,000. To gross profit, transferred to branch P&L account, 25,000, 122,400, 147,400 minus 12,000 minus 1750 minus 30,000, 1 lakh, 3,650. 147,400. Next is branch expenses account, debit, credit. Two salaries, rent, other. Salaries, rent, other, office. Expenses, 54,000, 9,000, 54,000, 9,000. Fine. Balancing figure, 54,000 plus 9,000 plus 2,500. 65,500. Branch profit and loss account. Branch adjustment 103,650. Two branch expenses. Two bad debts. Two discount. Two shortages. 65,500. Bad debts are bad debts 9,500, 5,500, 9,500, 55. Net profit transferred to general P&L account. $103,650 minus 65,500 minus 9,500, 55,000, 7,000. Something wrong, fishy. This plus 95 plus 55 plus 7,000 minus 103. 650. It is 16,150. It is 16,150. It is 16,150. It is 16,150. Now the next is branch cash account. Cash sale is 101,250 and collection from debtors is 345. Collection from debtors is 345. 345 plus 101,50. It is 446. 250. 446. 250. So we have made how many accounts? We have made 6 accounts till now. The next is stock reserve account, debit and credit. Guys, this is stock reserve account, and the last account says goods sent to branch account. Let's change the figure regarding the loading. Loading has to differ. No, loading is not this. They have been returns. Let's make the revised loading 6,12,000. 6,12,000. Then there are returns. 6,12,000. Then there are returns. Returns, the stock sent and stock returned 60,000. Then there are returns 60,000. And the loading will be reduced. 6,12,000 minus 60,000. 5,52,000. Okay. 552 divided by 5. This is 1,10,400. 1,10,400 plus 25,000. 135,400. 135,400 minus 12,000 minus 1,750 minus 30,000. Answer is 91,650. Ninety-one, 650. 91, 650 minus this minus 9,500 minus 5,500 minus 7,000, 4,150. 4,150. Goods sent to branch versus branch stock. Versus branch stock 6,12,000 to branch stock 60,000 to branch adjustment 1,10,400. 612 minus 60,000 divided by 5 to purchases oblique trading account 441 600 6,12,000. So this is goods sent to branch. Now, guys, the answer is ready. There is just one doubt left. One doubt left. 1 lakh becomes 1,25,000. 120 becomes 150. Debtors 155. Expenses are okay. Returns are okay. Normal loss out of normal loss of goods doing transport out of goods sent by head office to branch. Returns received from head office discount bad debts. Assumptions. Goods sent to branch. 6 lakhs plus 12,000. Out of this, rupees 12,000 out of this, the goods of invoice value of rupees 12,000 lost in transit and to be treated as normal. Given value of normal loss rupees 12,000. Okay. Normal is its invoice value. Is its invoice. Normal loss is given in the question at invoice value. Cash sales is 1/4 of net credit sales. Cash sale is 1/4 of net credit sales. Note. Alternatively, if we assume the total goods sent guys, it seems to be a beautiful answer. Need not do further hard work regarding this question. It is so well done. It's so well done. It is so well done. Need not do further hard work regarding this question at least. The next question for the day. The next question for the day is regarding insurance policy. Yes, guys, let's do it. Loss of stock policy, loss of profit policy. So answer part 1. Answer part 1. Loss of stock policy. Gross profit rate. Gross profit rate 27, 20, 85 lakhs. 27, 20, 85 lakhs. 27, 20 divided by 85 lakhs. 32%, 5% adjustment, 27%. Memorandum. Trading account. 1st April 23 to 1st July 23. To opening stock. To purchases. To manufacturing expenses. To gross profit. By sales. By stock on the date of file. Guys, a easy question, guys. Very easy question. 765. सर, हाँ सर, सर ऐसा है, बहुत बहुत सारे बच्चे मुझे मैसेज कर रहे हैं कि दे आर अनएबल टू ज्वाइन द क्लास। तो मैं फिर लेक्चर कंटिन्यू कर देता हूं, आप उसको रिकॉर्ड करके बाद में शेयर कर देना। डन है सर, आई विल कंटिन्यू एंड आई विल रिस्पॉन्ड टू द स्टूडेंट्स। डन, डन है सर, आई विल कंटिन्यू जी। थैंक यू, थैंक यू सर, थैंक यू। Purchases 1260. Purchases are 1260, 374, 500. 374, 500. Sales 2116. Gross profit is 2116 into 27%, 571, 320. The balancing figure is gross profit, and the gross profit will be this 374, 500 plus 1260 plus 765 minus 211600. That is 8,54,820. 2970, 2970,820. This is the answer, guys. Let's check it again. 854, 820. हेलो, मैम थोड़ा बाद में बात करते हैं, क्लास में। नोट, guys, I took the call because there was some problem being faced by students of CMA. So, guys, note, policy value is for sufficient amount. Claim to be lodged is equal to 854 minus 20 less salvage stock nil is equal to rupees 854,820. So guys, the first part of the answer gets over. Now we go to the second part. Answer part 2. Answer part 2. Guys, turnover of corresponding period. turnover of corresponding standard turnover. Let's call it by the name standard turnover. How to calculate the standard turnover? Turnover Q1 of 2022-23. Q1 of 22-23. Q1 standard turnover. Q2. Q1. The turnover given is 2116. 2116. And last year turnover was less. This time turnover is increased by 15%. So the turnover will be 2116 into 100 divided by 115. It is 18,40,000. No. Next. Standard turnover is, turnover of Q2 plus Q2 to 4. Turnover of Q2 of 22-23. That is Q2 of 22-23 is equal to the turnover of the full year minus 85 lakhs. 85 lakhs minus turnover of Q1. The remaining is turnover of 3 quarters. So 85 lakhs minus 1840 divided by 3. This is 22 lakhs 20,000. This is called standard turnover. Point number 2. Total standing charges. Here we assume advertisement expense as fixed expense. So the total standing charges are, wait guys, 530, 70, 530 plus 70 plus 165, 280 plus 165 plus 280 is equal to 530 plus 70 plus 165 plus 280. That is 10,45,000. All set, all done, ready for the answer. Answer starts here. Now step 1. Step 1 is short sales. Short sales corresponding period 22, corresponding period standard turnover 22-20 increased by the trend of 15% compared with the turnover of dislocation period. The turnover of dislocation period is 743, 750. 743, 750. So 22 lakh 20,000 plus 15% minus 743, 750. This is 18 lakh 9,250. This is called short sales. Next step, step two. Gross profit rate. The gross profit rate is equal to net profit of the last financial year. The net profit 1675 plus insured standing charges 875 upon turnover 85 lakhs into 100. 1675 875 divided by 85 lakh percent 30%. The fall is 5%, so effective it will be 25%. Step number 3. That is loss of profit. Loss of profit is equal to step 1 into step 2, 1809 250 into 20. 1809 250 into 25%. It is 4,51,000, 4,52,000 312.50 paisa. That is the answer. 4,50,000, 4,52,009, 1809 to 50, 1809 to 50 into 25%. 452, 312.50. Step number 4. Step number 4 is part 1. That is adjusted annual turnover. That is adjusted annual turnover. Adjusted annual turnover is last year's turnover. Is last year's turnover 85 lakhs. Last year's turnover 85 lakhs minus Q1 plus 15% plus Q1 of the current year. The Q1 of the current year is wait 2116. That is equal to 85 lakh. It is 85 lakhs or 85 lakhs 50,000. It is 85 lakhs. $85 lakhs minus 18 lakh 40,000 plus 15% plus 21,16,000. That is 97 lakh 75,000. Okay, this is adjusted annual turnover. Gross profit will be equal to 977,500. 977,500 into 25%. 24 lakhs 43, 24 43, 24 43 750. Step 5. Step 5. Additional expenditure. Additional expenditure. Additional expenditure part 1. Additional expenditure. Guys, the additional expenditure is, hope this is a quick revision. You must have read the chapter. Make sure. No denying the fact. 5,10,000. Second, proportionate additional expenditure. 5,10,000 into GP 2443 750 divided by 2443 750 plus uninsured standing charges. So the topic is uninsured standing charges. Thus, uninsured standing charges are equal to thus uninsured standing charges are equal to 1045 minus uninsured standing charges 875. 875 compared to 1045, 1,70,000 plus 1,70,000. Now this is going to be guys, enjoy, yeah. Enjoy. 26, 13, 17. 5,10,000 divided by कहाँ लिखा था 26, 13, 750 into 2443 750. Answer is 476 829. And third part is saving of profit. Saving of profit would have been, the turnover would have been nil. The turnover is 743. 743, 750. The turnover would have been nil, and the loss would have been 743, 750 into 25%, 185, 937.5. Least of the above. Least of the above, that is rupees 185,937.5. Now step number 6. Claim to be lost. Total loss is equal to loss of step number 3, 452, 450 to 312.5 plus 185 937.5 plus 452 312.5. The total loss is 6,38,250. 638,250. 638,250. 638,250. Claim to be lodged. Subject to average clause 638,250. The policy amount is just 17 lakh. Loss of profit policy amount 17 lakh. Whereas insurable amount is 4 step. Step 4 is 2443. 2443 750. So this divided by 2443 750 into 17 lakh. The answer is 444. Answer is 444. Note. Alternate answer possible if we take adjusted annual turnover to be 85 lakhs minus 18 lakh 40,000 plus 2,116,000 is equal to plus 15%. So 85 lakhs, let's confirm the values. 85 lakhs, yes, 85 lakhs. 2116 and 1240. Okay. 85 lakhs minus 1840 plus 2,116,000. ठीक है ना? Plus 15%. This is rupees 1 crore 92,400. Accordingly, gross profit amount, gross profit amount and claim amount will differ. It is beautiful answer, guys. Your patience and hard work, it is done. I'm going to the next question, guys. Guys, the next question, beautiful and easy. We are on the next question of hire purchase. We are on the next question of hire purchase. We are on the next question of hire purchase, guys. Cooperate. Great cooperation expected. So, answer. Answer. Cash price of eight scooters. Cash price of 8 scooters. How it is being done? See the cash per calculate cash price of 8 scooters. So 550. Last installment 550. Interest 3 is equal to 550 into 10 upon 110 is 50,000. Now this is 5 lakhs. This is installment 3. This is installment 3. This is installment 2, 490, 990. Interest 2 will be 990 into 10 upon 110. It is 90,000. It will be 9 lakhs. 9 lakhs. Installment 1. This is 4,30,000. It is 5,30,000. It is 14,30,000. Interest 1. 14,30,000 into 10 upon 110. It is 1,30,000. 13 lakh. Down payment. $13 lakh, down payment 10 lakh, down payment 10 lakh. Answer is 23 lakhs. Cash price per scooter. Cash price per scooter 23 lakhs divided by 8. 23 lakhs divided by 8. 287,500. Guys, are you understanding how easy it is? Done. The first part of answer is done in hire purchase. The first part of answer is done. What the answer they are demanding? Cash price of the scooters, interest payable in each installment, prepare scooter account. Books of Ajay, Anuj. Answer part 1. This is answer part 1. Now answer part 2. Books of Anuj. We'll get free quickly, guys. In the books of Anuj, we are going to make scooters count. Scooters account. You have to make scooters account for how many years? For all the years up to the final payment. Scooters account, debit, credit. The scooters are bought from whom? The scooters are bought from B Motors. The scooters are bought for 23 lakhs. The scooters are bought for 23 lakhs, yes. The down payment is by bank. Scooter account, sorry. It's a scooter account. It's a scooter account, sorry. Depreciation. Date column. Where is the date column? Oh, let's use the date column. Yes. So guys, when we bought the scooter, which is the year April 20, 1st April 20, B Motors. At the year end 31st March 21 by depreciation. 23 lakhs into 20%. First April 21. True balance brought down 1840. Depreciation account. $368. $1472. First April 22, true balance brought down 1472, 31st of March 23 by depreciation account into 20%, 294, 400. 31st of March, B Motors. B Motors will take over. B Motors. Loss on surrender. So they took over. They took over at how much? They took it over at agreed value of 394 450. 394 450. Star 1472 minus 294 400 for 3 scooters versus 8 scooters. 1472 minus 294400 into 3 divided by 8. The scooters are 441,600. ठीक है, taken over at So the loss on default is 441,600. Agreed value 394. 450 minus 394, 450, 47, 150. So loss is 47, 150. Balance carry down is up to the final payment. Up to the final payment. Whose account up to the final payment? Cash price of the scooter, scooter account, P account, up to the final payment. So 31st of March 23 by balance carry down. The carry down will be by 1472,000 minus 294400 into 5 versus 8 into 5. 1472 minus 294400 into 5 divided by 8, that is 7,36,000. So the total is 294400 plus 394,394,450 plus 47,150 plus 7,36,000. It is 14,72,000. Now the remaining trucks are. So the remaining trucks are 1st April 23. To balance brought down. 736. 31st March 24. 31st March 24. By depreciation, by balance carry. Depreciation is 736 into 20%, 147,200, and carry down is 5,888. 5,888 star. This is 1472. 1472 minus 2944 00 23 divided by 8 into 3 divided by 8 is equal to 4 lakh, is equal to 4 lakh 41,600. Next account is P Motors account. Guys, one more question is left. Please hurry up. Increase your speed, please. Date, particulars, amount, date, particulars, amount, 1st April 20. By scooters account, 23 lakhs. 1st April 20. To bank account 10 lakhs. Hope you are understanding. 31st March on 13 lakh. The interest will be on 13 lakh. Interest will be 1,30,000. The payment on 31st March at the year end will be to bank 5,30,000. 31st of March to balance carry down will be 9 lakhs. 24 lakhs 30,000. Now the liability is 1,121. By balance brought down 9 lakhs. Interest will be 90,000. The payment will be 4,90,000. To balance carry down will be 5 lakhs. Third year. First April 22. By balance brought down is 5 lakhs. Interest 31st of March 23. Payment couldn't be done. He took over the scooters. The agreed value of scooters is 394,450. The balance amount pending is balance carry down. 5,50,000 minus 394,450. 1,550. First April 23. By balance brought down 1,550. By interest. The final payment कब हुई है? Along with at the rate of 18%. Okay. After 3 months. 30th June or 1st of July. 30th June or 1st of July. 1,550 into 18% to 3/12 into interest is 7,000. Interest is 7,162,500. $162,500. 162,500, 550. Wait, guys, wait. Let me check up. 5,50,000 minus 394,450. This is another 5 year. Wait. This is 550. This is 550. This is 550. 1,550 एक और 5 फिर 0 into 4.5%. Absolutely fine. 7,000, 7,162, 550, 162, 550, 550. Okay, guys, the task is complete. Good. Now we are having 25 minutes for the last question. Let's try. Is it achievable? It's going to be about single entry. It's going to be about single entry. Here is the question, guys. Guys, here is the question. You are having furniture, stock, receivables, cash and bank, and capital account and trade payables, and that's all. And what you have to prepare is trading P&L account and balance sheet. And let's begin. Books of runs a business single entry system. So books of Mr. Gurmeet. Books of Mr. Gurmeet. Trading and profit and loss account for the year ending So we will make a trading account. We will make a P&L account. We'll make a balance sheet. Let's see. Balance sheet is going to be very small, limited number of accounts. Let's see what else. What else? There is going to be opening stock, purchases, sales, closing stock, depreciation. What else? What else? Number of accounts, number of expenses. There are going to be salaries and office expenses. All well, all well. What else? What else? What else? A very small, seems to be very small. Expenses are not more than 10. Not more than 10. I am saying not more than 10. So I said buy sales, buy closing stock, opening stock, to purchases, to gross profit. By gross profit. The name of the expenses are hurriedly. The name of the expenses are depreciation, salaries, office expenses, salaries, office expenses, depreciation, petty expenses, insurance premium, miscellaneous receipts, insurance premium, by miscellaneous receipts, and 1 to 3 expenses more maximum. Now we make balance sheet. assets and liabilities. Guys, it's a matter of revision for you. So please revise, do it fast. We are having assets by the name of furniture, stock, receivables. We are having furniture, stock, uh, trade receivables, cash, bank. That's all. We go to the working notes. Here we begin. Goods are sold to show a gross profit of 20% on cost. Goods are sold to show a gross profit of 20% on cost. Depreciation diminishing method. Payment of purchases are always made by a check, always by a check, always by a check, always by a check. Credit customers make payment by a check, otherwise by cash. Okay. Next, it is a practice to send to the bank all collections of the month, last day of every month after paying per month and per month. And the year ending March, the year ending last year. Okay, all well, all well, all well. A cash deposited in bank during the year. This is a cash deposit. Receipts from customers is given. Payment to creditors is given definitely by check. Payment of insurance premium is annual, some expired, some unexpired. Closing stock debtors receivables are given. 15,000 damages under dispute, anticipates a defeat, show it as loss. Cash shortage 10,000. Shortage of 10,000 was found on 31st March, and it was noticed cashier absconded with the shortage amount, if any not possible to recover the cash. So cash defalcated. One expense is cash defalcated. Miscellaneous are 1,400. Let's make all the accounts. We will at least trace something, guys. So I start with trade receivables account. Trade receivables account. Trade receivables account. I will say to balance brought down by balance carried down. When you make credit sales, it will come here. When you will make collection from debtors, it will come here. And that's all, nothing extra. So quickly, time is 18 minutes, task to be completed. Oh, time is less, hard work is more. 17,000, 65,000, 17,000, 65,000, 65,000, 17,000, and collection from debtors is, and the collection from debtors is received from 1228,000, 1228, 1228,000. So 1245, 1245 minus 65,000, 1180. Now cash sale is given, credit sale is given. So the 1180. So the cash sale we have to find out. Okay. Go to the trade payables account. This is working note 1. I go to the next working note. I said trade payables by balance brought down by purchases to bank. to balance carried out. Here you will find to know the purchases. You will find to know the closing stock. Closing stock. What else? What else? What else? What else? What else? Everything is given. Okay. Opening stock is 115. Okay. Let's see. Let's see. Gross profit rate is given. Purchases are given cash or credit and so and so. Personal expenses, cash received, collected, gone into the bank, insurance, miscellaneous. Okay. Okay. We'll find something. Yes, we can. We can. We will do. Uh, let's do it. A payment to creditors 1215. Payment to creditors is 1215. Trade payables account. And brought down creditors and carried down creditors. Creditors are trade payables are 35,000. Trade payables are 35,000 at the end. 35,000. Opening are 45,000. Opening are 45,000. The balancing figure is 1250, and this is 1205. This is 1250. Working note 3 will make memo stock account. Memo stock account. Memo stock account. To balance brought down. By balance carried down. By cost of goods sold. By cost of goods sold to purchases of creditors. So quickly, the stock level is 115. Stock level is 115, 90,000. Purchases, the balancing figure, purchases 1205. 1205 plus 115, 1320 minus 19,000. 1230. 20% on cost. Now, total sales 1230 plus 20%. 1230 plus 20%. 1476. Next is cash sales. Cash sale is total sales minus credit sales. 1180. 1476 minus 1180. 296. Next is cash account. Balance brought down. Cash brought down is 8,000. Cash brought down is 8,000. Cash from cash sales is 2,96,000. By salaries. By drawings. 3,000, 1,800. 3,000, 1,800, 36,000, 21,600. By 1,500. 18,000. Why bank? Deposited into bank. Why bank? The deposited into bank is 212. Deposited into bank is 212. Why cash defalcated is 10,000. Why balance carried on? So 8,296, 304, 36,000, 21,600, 18,000, 2,12,000, 10,000 minus 304. The balance cash is 6,400. The balance is bank account. Bank account says to balance brought down, to cash contra entry, to collection from trade receivables, by payment for trade payables, by insurance premium, and let's check up. 212. 1228. 1228, 1215, 1215, insurance premium 2,400, miscellaneous 1,400, balance carried down is 212, 28, 1,400, 1,441, 1,441, 400 minus 1215 minus 2,400, 2,24,000. 2,24,000. All job is done, guys. We are ready for the answer now. We are ready for the answer for sure. Cash sale is here. The cash sale is 296. The cash sale is 296. The credit sale is here. The credit sale is 1180. 1180. So 296 plus 1180. It is 1476. Stock is given. Stock is given. Stock is 90,000, 1,15,000. Stock is 90,000. $1,15,000. Purchases are done from creditors 1205. 1,476 plus 90,000 minus 115 minus 12. It is 2,46,000. 2,46,000. Now salaries are 36,000. Office expenses are 21,600. The depreciation is 10%. 60,000, 10%. Depreciation is 60,000. into 10%, 6,000. Insurance premium is for 1 year ending June 2400 divided by 3 by 12. 2400 9 by 12 expired. It is 1800 expired. Balance is not expired. To net profit if there is no other expense. To net profit 2,46,000 plus 1400 247,400 240 7,400 36,000 21,600 6,000 1,800 10,000 minus 247 400 1 lakh 72,000. Furniture is 60,000 minus 6,000. It is 54,000. Stock is 90,000. Cash or bank. Bank is 2,24,000. Bank is 2,24,000. Cash is 6,400. Cash is 6,400. Prepaid insurance is 600. Trade receivables are 17,000. 17,000, 54,000, 90,000, 17,000, 6,400, 2,24,600, 3,92,000. Capital, trade payables, trade capital, opening balance. Opening balance is given 308. Add net profit. The net profit is 172. Less drawings. Drawings are 18,000. So 3,08,000 plus 1,72,000 minus 18,000. Furniture stock, debtors, bank. Bank opening balance is 1,05,000. So the closing balance will increase. So 441,400 plus 1,05,000. So the closing balance will increase. 546, 400, 546, 400, 224 plus 105. It is 329. It is 329. The bank balance is 329. $329. The total will be 392 plus 105 for 497. 497. 308 plus 172 minus 18,000. It is 462. And the trade payables are 35,000. 35,000. So that makes the answer complete plus 35,000. That makes the answer complete, guys. It's so much of hard work. Good job done, guys. Great job by you all. Excellent job. We did how many questions? See, we revised 4 chapters. Another chapter in 1 minute we can revise is accounting standards. Let me show you one question of accounting standards. See, we are talking about construction contracts AS16. AS16, you will do it yourself. This question is AS11. This is regarding the stock. Answer is going to be very easy, guys. In the following cases, find the value of the closing stock AS2. And here you have to regarding government grants.